Hello everybody, this is Steve Rising with Thin Slice Trading at the Forex Trading Institute. A quick video here on the predominant trading condition in the Forex. One of the things that the Forex trader needs to understand is the way a currency pair moves on a day-to-day basis is not the same way that a stock or a future would move. So a lot of the techniques that are used trading, for instance, in the stock market on an intraday basis or an individual stock or in the futures market are not effective trading in the Forex market. And this is one of the primary reasons why there's such a high failure rate with Forex traders, is they have a tendency to attempt to try to trade the Forex as they would the equities market, the more popular market, and in fact those techniques don't work. The reason for this is because each currency pair, this is the US dollar versus the Swiss franc, is typically in a range-bound condition. That's the predominant condition. And this is a good representation here. This is from the 14th of November through to where we are today, which is January 5th, 2012. So we can see here for, these are all actual trading days, for over a month now here, we've been in predominantly range-bound conditions. So once again, we can see here, I've highlighted here where we've got our first range right here, where we were trading here from the 14th of November through to the 11th of December. And you can see here each one of these candlesticks, this is a daily chart, represents one day of trading activity. Very common situation is one day we can see that we've got a little bit of bullish activity. Next day we can see here that price actually ended exactly where it started at the end of the day here, and then we can see here moving forward a little bit of bearish activity. And so that's the other predominant condition that we have when we look at the Forex market, is that the bias, the directional bias of price is constantly changing, meaning it's very common for us to be looking for a long trade in 1, 2, or 3 hour window, and then in the very next 2 or 3 hour window we're trading in the exact opposite direction because we've then hit the top or the bottom of the range. Then what happens is we get a very short-lived period here where, in this case, the top of the range here, we cleared here, but keep in mind it didn't take a full day for price to clear the top of the range. If you look at some of the other videos that I've posted, I highlight this daily price action, and in most cases these moves, all that this means is that at the end of the day price closed higher than it opened, but it doesn't mean that for the entire day price was moving in one direction. Typically what happens is we get one little burst to the north, it's a form of breakout, and then price goes flat for 5 or 6 hours. We still may see some reversal activity, but the other pattern or condition that you can see that's developed here is all that's happened here is that the range has just shifted slightly north here at this point, and then we've gone into another range-bound condition, and where we are currently here today, potential for that top of range to clear here, but once again we would expect that move to be very brief. One of the things that you should take away from this is we can see that the overall tendency here from November 14th, which is on the far left here, to where we are today, January 5th, is that sure, the range has shifted slightly north. So if we were to look at this particular currency pair, once again dollar versus Swiss franc, and we were to look at this particular currency pair, we could see on a weekly or monthly chart where the overall tendency would give us the idea that the trend is moving north. But for us trying to trade on an intraday basis, it would be impossible to try to trade any of that activity because we literally would have been stuck in a sideways position for 18 days in the first portion of this range, slight little move to the north, and now stuck again for 14 days, where trading on an intraday basis using a scalping technique, we can take advantage of these back and forth opportunities throughout these consistent range-bound conditions. The benefit is we can achieve our profit, get out, be flat. We don't have to carry positions for extended periods of time or hold a position overnight. We're not susceptible to carryover fees. And more importantly, we don't have to work with extremely large stops. If you were trying to trade this overall, what looks like the emerging bullish movement north, or the tendency, which is labeled the trend, you would literally be working off of a 200 pip stop. If you, for instance, decided to take advantage of that, what you perceived as a trend at this point to where we are now at this point, you would be working off of a very large stop. And the reality is most people don't have the necessary capital to hold positions for 18 to 20 days. a price moving against them, working with 200, 250, 300 pip stops in many cases to be able to overcome this activity. So it's important to understand that when we look at the Forex market or each individual currency pair in the Forex market, the predominant condition is range bound. You have to remember that trend following techniques were developed in the early 1900s, and so that's been conventional wisdom for quite some time. And we see now with electronic trading, with online trading, the reality is that using trend following techniques is not always the best case scenario. It certainly was 40, 50, 60 years ago when we didn't have access to online trading or we didn't have access to markets online or electronic trading. But now we can take advantage of this intraday activity and the volume, the dynamics of all marketplaces given the global economy, given the impact of electronic trading is changing dramatically such that trend following techniques are really obsolete and not necessary for the individual trader because we can go in and take advantage of price moving in either direction. So I encourage you to watch some of the other videos that I've posted. Visit our website at theforextradinginstitute.com to learn more about thin slice trading in these predominant range bound conditions. Thank you for your time.